Welcome to the weekly pivot for October 19th, 2025. All right, so like normal, we're going to review last week. We'll talk about upcoming key events, and we're going to look a little bit further out, and then let's talk about some daily charts, some weekly charts, and zoom into the hourly and talk about the range that we're in right now. So last week, we were looking for a back test of levels before we were going to look for a move back down towards the bottom of the range from Friday's candle. We actually got all of that. So we ended up gapping up, testing some resistance levels. And then the following day, we gapped down, tested the bottom of the range, didn't break the Friday candle, and then came back up and started to recover the daily 21. Now, that being said, we did not get upside continuation. We've had multiple attempts of recovering this daily 21, including the Friday close, which remains to be seen what happens from there. But so far, we've failed to really get any continuation up back towards all-time highs. No continuation either direction. We've been stuck in a range. It was inside week. So the U.S. government's still shut down. Data continues to be impacted. We've been missing a ton of data. As you guys have noticed, there's just not stuff coming out because the government's shut down. We do have a lot of important events coming up, so let's talk about that right now. So next week, the big one is CPI on Friday, assuming that we get data. And then the following week, we've got this interest rate decision by the Fed. And right now, FedWatch is saying a 99% probability for another 25 basis point cut. 2:30 that day, we've got Fed Chair Powell's presser. A week from this Thursday, we've got core PCE prices and GDP. And then the following day, Friday 31st, we have PCE, which is the Fed's preferred inflation metric. And then, of course, Saturday, the 1st of November, as it currently stands, is the tentative deadline for the China trade negotiations. And this would result in currently what looks like a 100% tariff implementation, which, of course, would not be good. But the anticipation is we're probably going to get to a deal before then. Hopefully, we'll see that if that happens. But, obviously something like that, a deal being made on the China trade side and or the federal government opening up could be a catalyst for some movement. So on the right, I have a weekly chart with long-term ATR levels. Those are yearly ATR levels. And on the left-hand side, I have a daily chart with position levels, our quarterly ATR levels. So we'll talk a little bit about what that looks like in a second. But let's first look at the weekly chart. You can see here, I pointed out these two arrows on the right-hand side where we've got clear support so far at the weekly 813 zone. Obviously, we almost tested Friday's lows before bouncing last week and kind of largely stayed in range most of the week. And of course, this is an inside week that we had that printed for us here. Now, looking on the left-hand side, there's kind of two cases. We talked a little bit about this on Friday. I posted a daily chart on Twitter and YouTube community posts. So hopefully you got a chance to look at that. But this is largely going to be a little deep dive into what that might look like if we can break out of this range. First thing to note is we do have this daily compression. So I'm expecting a decent move to happen. We've got a ton of, we just talked about there's lots of things coming up that could serve as potential catalyst for one direction or the other, depending on how things go. And so I think this daily compression, and I'll show you in a second in the next chart that we have hourly compression as well. We're gearing up, we're coiling up for some sort of a move here. And so what I'm looking for on the bullish side is, and we kind of talked about this last week, is, I'm looking for a break and hold over the daily 21, and then I'm looking for continuation above this quarterly pivot right here. Without that, it's, and you can see that there's been resistance here, right? We've had this resistance a couple times. We couldn't hold over it. And even one of these times we came back below the daily 21 and of course recovered it back on Friday. But, that recovery of the daily 21 is good. That's a positive sign. But bulls really need to recover this quarterly pivot and really get above 67.20 to 67.25 for continuation up to, test through this supply and potentially test an all-time high. So that's really the bullish case. The bullish case is daily 21 EMA recovery, which we have. We want to hold that. Looking for a quarterly pivot recovery, and then looking for continuation, break and retest and continuation of this next level higher. The range that we've kind of largely been in is the 6,600 to 6,688, 46 range. You can kind of see it here. I'll expect to stay in that range until we show signs of actually breaking out of it. You can see that there's very, very clear support and resistance levels. So I would definitely note those on your charts. Pretty wide range, but right now volatility is high, so that's fine. For the bearish side, we've had this daily 48 quarterly short trigger support. You can see it. We tested it Friday the 10th, and then we retested it again last week. We need to break down 6,600, and then we need to break this quarterly short trigger to really make this bearish case look like a possibility. And of course, the daily 48. The bearish case is break of the daily 48. We lose the daily 48, starts to become resistance. We lose the quarterly short trigger. Those are roughly kind of around the same spot, around 65.50 to 65.60-ish right now. Then can look for a potential move down to some of these other levels like 64.73, 6,400, and then beyond if we get continuation from there. Looking at a zoomed in version of this. So on the left, I kept the daily chart with our position quarterly levels just to kind of provide some context here. And on the right now, I've zoomed in a little bit. I'm using swing levels for this one just to give you a slightly different perspective so we can kind of see the monthly levels. Swing levels are our monthly levels, monthly ATR levels. On the left, same deal. We've got to break 6,600. We got to break 66.88.46 for any meaningful pushes. Again, marking that there's daily compression here, and of course we've got hourly compression. All of these indicators are free, by the way, so if you're interested, you can go to my website, link in the description below. Everything's free. I don't charge for any of this stuff, so you can use it to your heart's content. You never even need to say anything to me. All right, so let's take a look at this right side. So what I have configured here is, we just talked about the monthly levels, the swing levels, but I also am showing the daily ribbon. So this is actually the daily ribbon right here. So same ribbon, same EMAs that you have on the left-hand side, just zoomed in with hourly candles so we can kind of see how things are working. So last week we talked about a swing golden gate open to 64.71.46 by the end of the month. That bearish case and a move towards that level, which is kind of roughly the first level down on the quarterly levels as well. That would be supported by break of Friday the 10th's lows and this 65.50 area. So without that, I don't really think that this is going to materialize, but if we do see that, then I do like this move to 64.71 by the end of the month. Now, on the bullish side, again, we need to recover these levels. You can see there's clear resistance here, clear resistance here. So we really need to break over these levels and flip them into supports before we can test all-time highs and get a potential breakout to higher levels. So that's really what I'm looking at. There's just to kind of recap it, we're in this range 6,600 to about 6688. You can say 6,700. That's kind of been that 6,700 6680 zone we talked about a couple weeks ago. Still very relevant, important resistance zone for now. We need to recover that quarterly pivot in order to get continuation upside, and then we need to break down Friday the 10th's lows to get continuation downside. Until then, expect to be in this range with some volatility as long as VIX remains elevated. And that's your weekly pivot for October 19th, 2025. I'll see you in the next one.